Welcome back, champions. Another mind-boggling stock news. In this video, you will get to know important details about mutual funds as an investment option and why you should consider it. Let's begin. A mutual fund is a pool of money managed by a professional fund manager. It is a trust that collects money from a number of investors who share a common investment objective and invest the same in equities, bonds, money market instruments, and/or other securities. And the income/gains generated from this collective investment is distributed proportionately amongst the investors after deducting applicable expenses and levies by calculating a scheme's net asset value, or NAV. Simply put, the money pooled in by a large number of investors is what makes up a mutual fund. Next, let us understand what is net asset value, or NAV. Just like an equity share has a traded price, a mutual fund unit has net asset value per unit. The NAV is the combined market value of the shares, bonds, and securities held by a fund on any particular day, as reduced by permitted expenses and charges. NAV per unit represents the market value of all the units in a mutual fund scheme on a given day, net of all expenses and liabilities plus income accrued, divided by the outstanding number of units in the scheme. Mutual funds are ideal for investors who either lack large sums for investment, or for those who neither have the inclination nor the time to research the market, yet want to grow their wealth. The money collected in mutual funds is invested by professional fund managers in line with the scheme's stated objective. In return, the fund house charges a small fee which is deducted from the investment. The fees charged by mutual funds are regulated and are subject to certain limits specified by the Securities and Exchange Commission. There are majorly 4 reasons to invest in mutual funds. Number 1. Diversification. Mutual funds let you access a wide mix of asset classes, including domestic and international stocks, bonds, and commodities. Number 2. Low costs. Because a mutual fund buys and sells large amounts of securities at a time, its transaction costs are typically lower than what you would pay as an individual investor. Number 3. Convenience. Buying mutual funds can be straightforward. Many banks and brokerage firms, including Schwab, have their own line of proprietary mutual funds as well as access to thousands of third-party funds. Number 4. Professional management. You get the benefit of having a professional manager reviewing and researching the fund's portfolio on an ongoing basis. Did you find the information helpful? Let us know in the comments.